Hello, everyone. Welcome to Money Hour Radio, a show where we help you grow your money, cut your taxes, and have a beautiful retirement. What could be better than that? I am one of your co-hosts, Ben Barzideh. I have my trusted, esteemed co-host, Matt Nadeau here.
Well, hello, everyone.
We are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located locally right here in Barrington and serving the greater Chicagoland area. We are fiduciaries, and as an independent, family-owned firm, we truly have the freedom to focus solely on your interests, not some corporations or those shady private equity companies just buying everything up these days.
I mean, it's the weekend, Ben. You got to be nice one of these weekends. Everybody
Well-
be happy. Weather's going to turn nice eventually.
Hey, don't do business with them. Do business with us.
That's right. All right. But of course, what we really want to do is, of course, take a minute, stop and say hi to all of our clients who we know you're listening each and every week. Thank you. We appreciate the trust that you've placed in us, and we love every one of you. And we have an excellent show today. So just want to tell you the big topics that we're going to talk about. We're going to get back to a topic that we've probably had to hit on 4 or 5 other times. Trump's threatening to fire Jerome Powell again.
Poor J. Powell.
It's like every day you go to work, you're like, what are they going to say? Are they going to fire me? You pack your little lunch and your wife puts a note in there saying it'll be okay, honey.
That guy can't retire fast enough, man.
No, he's like, I want to leave.
Yeah.
So other than that, a couple other things. We're going to talk about a specific company you may not know a whole lot about. It's called Allbirds, but it's a shoe company. They start talking about AI and the stock jumps 600%. What?
To the sky. I mean, it was sky high.
We'll talk about that. And then also we're going to talk about markets that had hit an all-time high, especially with the war, the oil prices, everything else going on. Why? And we're going to talk a little bit about that. And then at the end, our last financial planning topics, really interesting. A lot of people don't know how this works, but if you're divorced, you can still qualify for Social Security divorce benefits. We're going to talk about what those mean, how they work. You're not going to want to miss it.
You do not want to miss that. But before we start, as always, we encourage you to subscribe to our YouTube channel on moneyhourradio.com. You can view this week's episode along with all the previous ones. And please sign up for our weekly economic newsletter. It's called the 5-Minute Market Brief. It's informative, succinct, easy to read. You get a really good idea of what we're seeing and analyzing that week. You can sign up for that at bnwealth.com. And while you're on bnwealth.com, hey, follow us on our social media pages. If you like our Instagram, Facebook, you'll get updated information anytime it's new. So do that. But let's get into our first topic today, Matt. Poor J. Powell.
It's the standoff at the OK Corral. It's Trump, and he's like, hey, we want to have this leadership of the Federal Reserve dealt with. And Federal Jerome Powell's term is due to end in less than a month anyway. So what really happened is Trump last week said he's actually was going to make an effort to fire Powell if the Fed chief were to go through with his plan to stay on as the chair pro tem. So basically it just means beyond the May 15th date, if they weren't able to, confirm Kevin Warsh, who was nominated by Trump to be the successor, if he's not confirmed by the Senate, they need somebody to stay on. And Powell said he would do it. And Trump's like, hey, I'll have to fire him. And he even said, quote, well, then I'll have to fire him, okay? If he's not leaving on time, I've held back firing him. Thanks, President.
Even on his way out, he can't avoid getting the business from Trump.
It's like, poor guy.
And actually, just some developments. Right now, I saw the headline that looks like the Justice Department's going to drop the probe into the Fed, meaning that probably Kevin Warsh will get confirmed now. So
yeah.
Breaking information here.
We'll see what happens. You never know.
Such drama, Okay, Allbirds, what is going on? Allbirds goes AI, and its stock soared 600%. It was the talk of town. Now, after losing its relevance as purveyor of tech bro sneakers, Allbirds wants to become an artificial intelligence company now. It is going AI. And its stock, like we said, shot up 600% on the news actually on record volume as well. It's given some of that back now over the last couple of weeks, but it's still pretty high. Now, what's interesting is there's precedent for companies to attempt these type of dramatic or maybe desperate pivots in an attempt to capitalize on hot trends. This was actually a very popular strategy back in late 2017 and early 2018 as businesses sought to hop on the blockchain, bandwagon, crypto, all that stuff.
Yeah, remember with blockchain, it was Bitcoin and the crypto utilized this technology. So it got hot and people were like, let's jump in. So there was a company called Long Blockchain, and they used to be known as Long Island Iced Tea. Well, that didn't move. Didn't work out. Of course, the stock initially soars, and then they were delisted less than a year later. Now, there's another one called Riot Platforms. They used to be a diagnostic equipment company, and they turned to Bitcoin mining and then to an artificial intelligence compute. And it's done much better. So Allbirds is kind of hoping, well, this new AI overhaul will give it new life. And it actually got a $50 million financing agreement to become this AI infrastructure provider. And it does say, of course, it's going to change its name to Newbird AI. It's going to have new graphics processing unit as a neo cloud, similar to CoreWeave, you know.
Yeah, whatever that means.
Exactly.
Matt's a big nerd. He's the big tech guy around here. I'm the, Matt, how does this work guy? Tell you what, man, maybe we should go AI, Matt. It can be BN Wealth AI. I kind of like that, I think.
Hey, just start processing. If we can get that $50 million financing agreement, that'll be excellent.
No doubt. Okay, now let's talk about the market. We've had numerous clients ask us, how is the market at all-time highs right now? It just makes no sense. We got war, high oil prices, private equity ruining America, buying all these things up, allegedly. So it seems very logical that the market could be at all-time highs. So we want to talk a little bit about what could be causing that. And last week on our show, we mentioned how it's been a very strong earnings season so far, which has helped a lot. But the main catalyst, the main reason that the market has recovered and is making new highs, in our opinion, is that oil prices are finally stabilizing, at least for right now. And specifically, the worst case scenario for the markets, which was that oil would surge to $200 a barrel if the conflict was extended in the Middle East. Well, the good news is that scenario has largely been eliminated now. And while oil right now is still high at $95 a barrel, it's not enough to derail the economy or to really negatively impact corporate earnings too much.
Yeah, let's put this in perspective as well. I know it's a long time ago for all of us losing our memory a little bit, but oil back in 2008 was sitting at $150 a barrel. And even in 2022, it was at $140 a barrel. And both of those hurt the economy way worse than it has now. And $150 back then, that was a lot in 2008. With inflation today, Ben, I don't even think we can take our families to dinner at Olive Garden for that money.
Not if you want to have a drink and an appetizer, that's for sure.
You get a few breadsticks and that's about it.
Here's another analogy. It's kind of like this. Matt, I weigh probably about 180 pounds or so, which is a little bit higher, much, much higher than what I did in college, right? High school different, but college.
All right.
Matt, you're kind of skinny, right? You're probably weighing in about what? 190, 200 pounds?
Sure. Right in there. Yep.
Kind of same as college, right?
Right in there.
Well, if you were to take our shirts off right now and we'd stand in front of the mirror next to our younger selves, we'd quickly see that it ain't the same 180 or the same 200 pounds, right?
The numbers are the same. Everything else is different. Listen, yeah, it's like that you're saying, Ben, like $95 a barrel is high, but come on. I mean, it's not too much. It's not enough to cause lasting damage. And what's really more important for the market, it's not heading towards $200 a barrel. At least for now, it doesn't look likely. So we're happy the markets have recovered from those March lows. We're going to enjoy this rally while it lasts. And remember, we actually were out of the market and in the safety of bonds for about 3 weeks while the storm was bad. And as the data changed, we got back into stocks, not this week, but actually last week. And we're fully back to the races for some of our models, 100% stock for some of those clients whose risk tolerance allow it. And additionally, we've reallocated our target areas into the market for ones that, based on our research, we feel have more optimum opportunities, more optimum sectors and categories in the market to be invested right now, areas with more momentum and strength.
However, we do actively monitor our positions, our investments every single day. And if the overall market conditions deteriorate, we will not hesitate and we will get defensive again by selling out of the market just like we did before and going heavier into bonds or cash while we wait for things to improve. We do not believe in riding stock market crashes all the way down to the bottom, waiting for money to recover. So if our investment philosophy resonates with you, if you're looking for a new financial planner, please reach out to us, give us a call. We'd be happy to sit down and speak with you. Our phone number is 847-780-2980 or go to bnwealth.com. Don't go anywhere because as soon as we come back, we're going to talk about divorced Social Security benefits and how they work.
Welcome back. Thank you for tuning in. This is Money Hour Radio. It's a show where we try and help you grow your money, pay less taxes, and have a beautiful retirement. And I'm one of your co-hosts, Matt Nadeau. Of course, I have with me my esteemed co-host, Ben Barzideh.
Hello, everyone.
And we're both founding partners and wealth managers at Barzideh and Nadeau Wealth Management. It's an independent and comprehensive financial planning firm. And we're located locally right here in Barrington and serving the greater Chicagoland area.
And we have such a good segment we're going to get into right now about Social Security divorce benefits. But just want to remind you right before we get into it, please subscribe to our YouTube channel. It's called Money Hour Radio. You can view this week's episode along with our previous ones. We actually have almost 16,000 subscribers, Matt.
Hey, we're getting there. Every week we'll hopefully get a little closer.
And then we have a fantastic weekly commentary, market commentary, economic newsletter. It lets you know exactly what we feel is the important events that week, what we're seeing, our thoughts on where things are headed. A lot of times, if we feel it's time to get out of the market or get back in, we'll announce it on that newsletter. You can sign up for that. Just go to bnwealth.com and you can sign up for that. All right, let's talk about Social Security divorce benefits. And today's financial planning topic is going to be about divorce benefits. And yes, it is the rare situation where your ex can still contribute to your happiness, at least financially anyway. And Social Security divorced spouse benefits are actually one of the most overlooked ways to boost retirement income. And if you were married long enough, you may be entitled to benefits, guess what? Based on your ex-spouse's work record, even if it's been decades after the divorce. But the rules are specific, and the timing decisions can have a big impact on how much you receive. So listen closely if you're divorced. Today's show may help you get some more money that maybe you may have otherwise missed.
Yeah. So first, we got to understand how they work. How do these divorce spouse benefits work? So let's keep it basic. At a basic level, Social Security does allow you to claim a benefit based on your ex-spouse's earnings record instead of or in addition to your own. So to qualify, there are, a number of criteria that need to be met. And these are the big important rules. So you listen carefully to make sure you meet all of these. So one, had to have been married for at least 10 years. If it's less, you don't qualify.
Hey, by the way, Matt, you know why they put it 10 years? Guess what's the average year people divorce?
I would guess 7. They say the 7-year itch, right?
It's like 7 to 9.
Yeah. Exactly. But hey, 10 years means maybe you could have 3 or 4 of these marriages that qualify.
Yeah.
All right. So a couple more things for this criteria. So married at least 10 years. You must be age 62 or older. You must be unmarried. Now, there are some limited exceptions. And your ex-spouse does need to be eligible for Social Security, even if they haven't started claiming yet in most cases. So if you end up meeting this eligibility requirements, you can actually receive up to 50% of your ex-spouse's full retirement benefits once you hit your full retirement age. And importantly, your ex-spouse's benefits, they actually do not get reduced if you're claiming on their record.
Matt, did you say importantly? I don't think that many people would care anyway if their ex-spouse's
Yeah.
amount gets reduced. They'll probably be like, good, I hope it does. No, actually, if your own benefit is higher, you'll receive that instead, which is nice. And in many cases, Social Security essentially tops off your benefit to match the higher amount. And the best news of all is this: you don't even have to tell your ex. You don't have to talk to them about it. You don't even have to text them.
Some people be like, I'd rather give up the money than have to talk to that bum again.
Exactly. So here are the key decisions and strategies. The biggest decision is when to claim. And you can start as early as age 62, but doing so permanently reduces your benefit, often by like 25 to 30%. So generally speaking, you want to wait until full retirement age, and then you would get the maximum, which is 50% of your ex-spouse's benefit. So again, full retirement age. But unlike your own retirement benefit, there's no bonus for delaying it past full retirement age. So that's a big one. And then another key strategy involves comparing two things: your own work record benefit and then your spouse's benefit. You typically would receive whichever is higher. And in some cases, this actually creates a dual entitlement where you receive your own benefit plus a partial spousal add-on.
Yeah. I mean, that dual entitlement sounds better than it is. It's still basically up to 50% of the ex-spouse's benefit, but they'll top you off basically. And the good news, really, if you're an ex-spouse out there, you're divorced, your ex-spouse, if they made more money than you, then you could get a serious upgrade. Pretty, like, we've seen some substantial increases. And just wait, if your ex-spouse has passed away, it gets even better. And I don't mean this to be morbid, but the rules change significantly. You then could qualify for survivor benefits worth up to 100% of your ex-spouse's benefit. And that's usually far more valuable. And you can take that while you let your own benefits accrue and build up to age 70. I mean, I can't help but think that if you can't stand your ex anyway, this might be the best thing that ever happens to you. All right. I mean, I know
It's
they're
incredible,
gone.
right?
They're gone. You get 100% of their Social Security. I'm not saying go out there, do anything to harm them. Don't pray that they die. But if it happens, you might as well make lemons out of lemonade or lemonade out of lemons.
Hey, we get it. It's a very it's like a complicated emotional win. All right.
Yeah.
So now the pros of divorced spouse benefits. We want to get into the pros and cons of it. One major advantage is that obviously it would give you increased retirement income that you may not have had otherwise. So if your ex was a higher earner, like you said earlier, this can significantly boost your monthly benefits. And another benefit is, of course, independence. Again, your claim is confidential. It doesn't require your ex's permission or participation. Your Social Security, your choice. And then there's also flexibility with multiple marriages. So get this: if you were married to more than one person for at least 10 years, so you were married to a few different people, each one for at least 10 years, you can actually choose which ex-spouse's record to use.
It's like if you get married and divorced a bunch of times, you're giving yourself better odds. Like, who's going to give me the highest divorce benefits? It's Social Security diversification. Don't put all your Social Security eggs in one husband basket.
Exactly.
Yeah. So let's talk about some cons and limitations, right? The biggest limitation is this 50% cap. So even if your ex delays benefits and receives a higher payout, your spousal benefit is going to be based off of their full retirement age amount, not what they actually collect. And another drawback is if you have these early claiming penalties that Ben talked about earlier, it's permanent. So if you claim at 62, you're going to reduce those benefits for the rest of your life. And then additionally, there's some rules around remarriage that can restrict your eligibility. So In most cases, if you remarry before age 60, it disqualifies you from collecting on a former spouse's record. And there are some exceptions for survivor benefits.
Exactly. Listen, love is great and all, but timing matters in this type of situation. Like you said, Matt, you can't be 60, or you got to be at least 60 to remarry. So if you're like 59 and you're in love, don't get married for another year, right? Delay it, make him work harder for it, keep him guessing, whatever you got to do. And then common pitfalls. Another one is, we talked about it earlier, but it's claiming too early without really running the numbers. Many people lock in a reduced benefit when waiting just a few years would have produced such a significantly higher lifetime income. Plus, people are living a lot longer than before, so you need to plan for that. People also sometimes assume that their ex must already be collecting benefits. And in reality, if you've been divorced for at least 2 years, you may still qualify even if they haven't filed yet. And then lastly, you got to keep good records. Failing to document your marriage properly, things like your date, divorce decree, it can delay or complement claims.
Yeah, and there's so many different Social Security rules out there, but this is one of them, this divorce Social Security benefit that's powerful, but there's also nuance to it. And the biggest gains you usually see is from understanding these different eligibility rules and coordinating your claiming strategies carefully. And Ben, that's why we always recommend talking to a professional like us, somebody who can look at these nuances, look at these rules, utilize powerful software in identifying these opportunities and coordinating that with all of your other income you have in retirement, including like if you have pensions, if you have 401ks, IRAs, all of these play together. And you want to make sure that you're not making rash decisions that could permanently hurt you by, picking the wrong strategy.
Yeah, sorry for all the jokes too, by the way. We had a little fun humor with this segment because last week we did one on survivor benefits, and you can't really make jokes, when people are passing away. That was a sad topic.
Yeah.
So divorced, we had some extra jokes for you today.
Listen,
now,
go ahead.
No, I was just going to say, if you are in need of a knowledgeable financial planner, someone who puts your interests first, we would be honored if you gave us an opportunity to talk with you. If our investment and financial planning philosophy resonates with you, please reach out to us for a complimentary consultation. You can reach us at 847-780-2980 or go to bnwealth.com and sign up. All right, Matt, what were you going to say?
Well, I was just going to tell people, we encourage you to go out there, sign up for our weekly economic newsletter. It's the 5-minute market brief you talked about. We'll keep you connected to all of the information you need, and we will not send your information out where you're going to get solicited by a bunch of things. So please sign up. Go to our website at bnwealth.com. We're out of time. God bless you, and we'll see you next week.
Bye, everyone.